Hello, I'm Brian Foster.
And I'm Jasper Kim.
Today, we'll present our stock pitch on Arista Networks. Before diving into the analysis, what exactly does Arista Networks do? Well, Arista is a key player in the cloud computing and networking industry, which is rapidly growing due to increasing demand for data storage and infrastructure to be able to handle high processing power and AI workloads. Their customers generally consist of large cloud service tech companies, universities, financial institutions, and data centers.
Further detail on what Arista exactly does would be cloud networking and security solutions. Cloud networking is the practice of using the cloud via the internet like Microsoft Azure or Google Cloud to create, manage, and connect networks. This has become increasingly popular rather than relying on traditional physical infrastructure on servers. Security solutions in cloud networking focus on protecting data and preventing cyber threats by implementing AI-driven threat detection, zero trust architecture, which requires strict authorized access, and network segmentation, which is the division of a network into smaller, isolated segments to improve security and control.
Now, the main products offered by Arista. First is their extensible operating system, which is a network operating system that powers all Arista devices with live monitoring, automation, and programmability across networks. Second is their Ethernet switches, which provide low latency, high-speed performance. Third is their cloud-based management platform, which is called CloudVision. It is used to optimize performance in the present and improve reliability for company networks.
Now, moving on to our industry as a whole. There are significant growth estimates in several sectors. First is the AI growth. The global AI market is expected to grow from $214.6 billion dollars to uh 1.8 trillion by 2030, showing how AI is becoming more and more present in our society. Second is the growth of cybersecurity concerns due to the new advanced threats constantly attacking systems. The global security market is expected to reach 500 billion by 2030, which is a great opportunity for Arista to expand further. Third is cloud migration. Businesses continue moving to the cloud to store data, increasing Arista's pool of customers and potential revenue.
Now, the company overview. After seeing the broader industry, let's zoom in on Arista's own production. Just this past year alone, Arista has grown over 14.2% in revenue. Arista Network is also ranked first in market shares for data center sharing. Not to mention, Arista Networks holds 30 to 40% of the shares in the high-performance switching segment in the data center switching industry.
To further highlight Arista's strength, Arista has consistently outperformed the S&P 500, reflecting its great upside. This growth can be attributed to the rising demand for high-quality networking and expansion to new businesses.
Now let's analyze the moat analysis of Arista Networks.
Arista Network has a narrow moat, which means that Arista Networks will have a competitive advantage for the next coming decades. They have built a competitive position through a stable stream of recurring revenue, strategic partnerships like Meta and Google, and high margins. In 2024, about 25% of Arista's total revenue was recurring, providing predictable cash flow even during fluctuations in the market. The two main sources of revenue are software subscriptions like CloudVision and long-term service contracts that ensure customer involvement. These segments continue to expand, showing that Arista is moving beyond hardware sales only. In addition, Arista's gross margin in 2024 was 64.2%, well over above industry average, allowing them to invest in ways to further innovate.
While ANET is a strong investment, it's important to consider the risks that could impact its growth and position in the industry. Firstly, Arista competes with large firms like Cisco and Juniper. While Arista has gained significant market share, pricing pressure from external forces or aggressive innovation from competitors may lower Arista's prominence. The second thing to watch out for is a significant portion of the revenue comes from hyperscale cloud providers like Meta and Google, which means if there's a significant downturn in the industry, Arista's value may tank. The last risk is supply chain shortages. Arista relies on semiconductor suppliers for its networking hardware. Supply chain bottlenecks and shortages may lead to higher costs.
The new age of AI emerging and becoming a central part of our society, Arista has shown the benefits of it as a tool to help create more efficient networking solutions. Rather than being a risk for ANET, it opens up many pathways of opportunity to further grow the company. Current examples of AI being a great addition for Arista are the extensive operating systems, also known as EOS, and networking tools that are upgraded by the efficiency and removal of manual work that previously network engineers had to do, like configuring, monitoring, and troubleshooting systems.
Moving forward now to the ESG considerations. Arista has shown environmental responsibility, charity donations, and ethical business practices. The company has implemented an environmental management system focused on environmental protection and continuous improvement. Arista's manufacturing facilities are ISO 14001 certified, ensuring they meet global environmental standards. Also, its Santa Clara headquarters and San Francisco office are LEED Gold certified, reflecting a strong focus on energy efficiency and sustainable building practices. The company has given back to communities too. They've been recognized by Second Harvest for providing over 500,000 meals to Anganwadi centers in India. Lastly, for governance, Arista upholds high ethical standards. The company enforces a code of ethics and business conduct, ensuring fair competition, ethical behavior, and strict compliance with laws and regulations.
When comparing Arista Networks to its competitors, it becomes clear that ANET is a great investment. The first graph on the left shows Arista's enterprise value to its earning before interest, taxes, depreciation, amortization at 24.5 times higher than all the other competitors and the industry average. Arista's 35.6 times price to earnings ratio multiple is significantly higher than Cisco and Juniper reflecting a strong growth profile and profitability. Arista is growing at 15.3% year over year, far outpacing everyone in the industry average. Arista boasts a 64.1% gross margin above the industry average of 60% and an impressive 32.4% return on capital, compared to others like Cisco and Juniper. Looking ahead, Arista's projected revenue growth remains strong, with estimates of 19.3% in 2025, 17.4% in 2026, and continuing above 14% through 2029. These numbers show Arista's strong competitive positioning, elite potential, and market leadership in high growth networking solutions.
Now, onto the financial analysis. There are three main points that showcase Arista's performance and potential. Arista carries zero long-term debt and holds over $4 billion in cash and investments, giving it financial flexibility that most tech companies don't have. Arista's stock has skyrocketed over 300% in the past 5 years, massively outperforming the S&P 500, which is at 80%. This has shown Arista's value is climbing more and more. Arista Networks free cash flows 2.34 billion in 2024, which helps them fund research, acquisitions, and stock buybacks. And the graph on the right here shows Arista's strong revenue and net income growth, with both increasing consistently over time, alongside a rising cash balance that indicates financial stability due to efficient cash management and high demand for Arista's products and services.
For our intrinsic value model, we decided to use discounted cash flow model, which estimated that Arista is undervalued with an intrinsic value at $120 per share, which would be a 54% upside potential from the current price of 77.94, based on projected revenue growth of 17% over the next 5 years and at a 12% discount rate.
Okay, now with all this information taken into account, we rate Arista Networks as a strong buy with the target price of $120. The reasons for this were previously discussed. First being further growth this company can have, especially in the AI sector, which will become more and more prominent in years to come, the strong standing in the market against its competitors, and overall increased demand for their products and services.
Thank you for
Thank you for
listening
listening to
to
our
our
presentation.
presentation.